right, so it was requested that we talk about daily bias, how to find it, and there are a few things that you want to take into account when you're framing your daily bias. Let me get this midnight open indicator off here. There, okay. Um, the easiest way, and probably one of the more common ways, is you look at the daily chart and you say, okay, we have this daily candle, and it's just kind of like candle range theory, CRT kind of thing, but it's very common for daily bias. We wicked above the previous day's high and closed below, so the next day we're going to reach for these lows and any other potential points of liquidity. A daily candle with almost no wick is a pretty good one. Um, but then you would see that yesterday, that daily candle, that kind of idea would have gotten you smoked because you'd have been looking for longs because we came down, swept below the lows, and closed back up in the range, right? So that's why a daily profile is only part of it. You want to look at the previous day's high and low. All right, yeah, we took out that low. We closed pretty near it. That would make me kind of neutral. The other thing you want to think about when you're looking at that is weekly bias. So let's take a look. So that's one part of daily bias, okay? You're looking at the previous day's candle and how we closed in comparison to it. The next is taking into account weekly bias. So for weekly bias, all right, I've got this new week opening gap here. And what do we got going on? Well, a weekly time frame is higher than a daily time frame, right? Yes. So we go up into this internal liquidity, this new week opening gap, and we push down, which means that tells me that we're looking for sell side liquidity, which would be these lows, and maybe some other lows over to the left. We're not going to worry about that right now. Okay, so we get this, we come down, we close down the range. We get this ugly candle for a day after FOMC is not a really good daily candle. It's very kind of gross. But we didn't meet our weekly objective yet, which was down here, which was my TP2 from this morning. And so I was still leaning bearish because we hadn't taken any sell side liquidity yet. So if I go to the 4 hour, getting ready for this morning, what I look at here is, okay, here's yesterday, we come down, and then we get this afternoon candle that comes up. The one thing you want to note is you see how this body is right here. We didn't get a change in the state of delivery. This body didn't close over this body, so no change in the state of delivery. We did wick above it because there was no wick on that candle, so we had to put a wick on it. But we closed below. So that tells me, okay, we're probably going to be bearish. We opened at 6 p.m. and we did nothing but dump on the 4 hour chart all night long. Asia really consolidated a lot. So we go down to the hourly. And I want to look at the hourly and see what kind of points of interest do I have in here. Okay, I've got this 4 hour that didn't get a change in the state of delivery. On the hourly chart, what do I get? Do I get a change in the state of delivery? Yeah, I do right here. We get the swing high. We get a body close below. Right here. All right, so now I'm feeling pretty good about it. Okay, now I just need to see some kind of opportunity to take a short. London opens down here. It comes into this hourly fair value gap, pushes back up into this order block, and then we dump pretty much ever since then. So daily bias, you can make it simple where you just look at the previous day's candle, but I would caution you against that. That's only part of it because we're not trying to trade patterns. We're trying to find the narrative of price and trade with that. So for me, the key to being bearish today was not getting a change in the state of delivery on this 4 hour. Now, if we had closed a 4 hour candle above this, I'd have been looking for a retest and then longs to here maybe and probably on up. But we didn't get that. We closed below and then we dumped. So there's a lot that goes into it, but it's really like 3 or 4 steps. You just have to know what you're looking at. So weekly profile is kind of the key. And let's take a look at just what this week looks like on the daily chart, okay? So, the way a candle opens, you get an open, high, a low, and a close, or an open, a low, a high, and a close. In most cases, right? So let's take a look. We get Monday right here. There's almost no wick on the bottom of this thing. So this is our open. We get our high. Now we come down and get our low. We're going to get our close. So when you're looking at these higher time frame candles, you need to think in terms of open, high, low, close, or open, low, high, close. In this case, it was open, high, went into the new week opening gap, low. We took out this liquidity over here, and now we're going to get a close. And if we look at the weekly chart, that's a pretty bearish looking candle, is it not? So that would tell me that we're still on track based on our previous discussions on the monthly chart to come down and get some of this sell side liquidity we had marked out several weeks ago. We have a monthly candle with no wick here. And higher time frame bias is really going to be what helps you understand how a day is going to go. We have a monthly with no wick here. And then we have a monthly fair value gap right here. So these are our draws on liquidity. They're still farther down, especially if we think that longer term the market is going to be bullish. Because you got to think right here, well, not even there, right here, we open a new yearly candle. We didn't take buy side liquidity. So if we're going to be bullish, we have to come down here and take some sell side before we can go back up to all-time highs. So we got this. We're coming down. This is the area where I really would expect us to bounce, 325.25. And so I've been trading with this in mind right here, the open high, low close, or open low, high close in the case of the yearly candle, thinking, okay, we're going to open, we're going to manipulate down, and then we're going to push up. And that's how you want to frame it. So when Monday comes around, we're going to look at weekly candle. All right, we got these targets down here. Now, Monday could go one of two ways. It could open, it could come down and take the sell side and we could shoot up. Or it could open, it could come back up in here and retest some of these higher time frame areas. We got this rejection block right here that we could retest that we seem to have been bugging the crap out of for all week long. Go up into there and come back down. But to think about that, you want to look at the 4-hour chart. So we go from weekly to 4-hour to 15-minute. So 4-hour chart. If this thing will open up now, Trading View. Sorry guys, I don't know if my internet's crapping out or what. Hang on a second.